Michael, I want to get your response to those comments from Minard. Could this end in tears?
Yeah, I suppose so. That's kind of a dramatic way to say that it's going to be a tough time. But I think that the Fed's doing the right thing at this point. And I'm a little less optimistic that we're going to be able to avoid a recession. I just saw Steve's report at 52%. You know, we think there's a pretty high probability of recession, and we think that's why the interest rate spikes that we're seeing right now by the Federal Reserve may start to slow down here in the fourth quarter, first quarter, because I think the economy is going to soften pretty significantly.
So then is it fair to say you're in the hike and hold camp?
I am in the hike and hold camp, yeah. And in fact, I'm not only in the hike and hold camp, if the Federal Reserve continues to tighten the way they have, I'm of the hike, hold, and maybe even cut in the first half of next year if we start to have a recession. Even if they cut a quarter point, I think that would be a green light for stocks if the Fed is really pausing their hiking pattern.
Steve, how likely, if we do go into a recession, and especially if inflation is not necessarily coming down in a dramatic way, at least not yet, how likely would it be to see the Fed actually not only hit the pause button but reverse course? What would it take at this point?
You know, I think the pause button is more likely. The Fed wants to get rid of inflation. I don't think it wants to go down this path and then sort of go halfway. You'll note that several Fed officials have brought up the analog of the 70s where the Fed did hike and then it started to hold and cut, and then inflation came back and it had to do it all over again. I don't think the Fed wants to go through that. Listen, Morgan, there's an interesting question that has a lot to do with spelling, right? I think when Minard was talking about breaking the economy, he was talking about B-R-E-A-K, the economy. And I think that what Powell is talking about is break with B-R-A-K-E, the economy. And I think they can do that without breaking the economy, so to speak. So it's a question, and I think the Fed is going to keep going until inflation gets down to, at least on a path to where it wants to go. I'm pegging a rate, Morgan, of 3.75 to 4%. I think the Fed could potentially hold there if it starts getting some better news on inflation.
Yeah, that's certainly not as high as some forecasts. You know, Michael, I'm reminded of what Goldman said yesterday, talking about what they expect out of the meeting. Some FOMC participants will likely see forecasting cuts as counterproductive after pleading with the bond market in August. Do you really expect dots to suggest more than, say, one cut in 23?
No, I don't think. Let me be clear. I'm not talking about the Fed going crazy and actually cutting rates significantly. But as Steve mentioned, a pause or even maybe just language that suggests they might pause or cut a little bit, I think perhaps could be in the cards if recession happens. You know, I think people really sometimes lose track of the fact that rates are still basically pretty low on a historic basis. So we're really basically going back to normalcy here. We're not going back to some crazy 1970s oil shock inflation. So I think the Fed, even if we go to 4, it sounds dramatic compared to where it has been, but it's not crazy. And stocks historically, if you look at the numbers, as long as the rate slope begins to ease, stock can do okay in this kind of environment. It gives companies pricing power. And if we have high employment rates, the economy still can recover. So again, this sort of narrative that we're really headed towards disaster, I think, is really, in my view, overblown. This is just a return to normal interest rate policy.